Okay, and on our hot seat today, instant personal loan fintech KreditBee says there is some change in sentiment since RBI's action on Paytm Payments Bank, but believes investors in India have a more nuanced understanding of the situation than their overseas counterparts. In a chat with me earlier, KreditBee's co-founder and CEO Madhusudan E said fintechs that are compliant with rules have nothing to worry about, and added that KreditBee is eyeing a 30 to 40% growth this year. Take a look. Madhu, thanks very much for speaking to us here on CNBC-TV18. Lots of news surrounding the fintechs. I mean, they're constantly in the news for good or bad reasons. What do you make of some of the recent events, whether it is surrounding one particular entity and the reaction thereafter from the community and then from the government? I'll hold that.
Yeah, sure. So I think as fintech industry, probably we have never stopped keeping the media busy or keeping the industry busy there. So what I would say is that, so the pace at which the entire fintech itself has grown, especially in digitizing a lot of banking products, I think that has grown in an astronomical pace, right? So what really is happening now is the regulation is also evolving to catch up with that particular pace of growth and trying to put a lot of saneness in terms of how the industry should behave, what kind of growth guardrails has to come in, and then what is the pace of growth at which they have to grow and whatnot, right? So I do believe that this is happening at a very early stage, at which a lot of the fintechs probably are trying to kind of compare themselves now to the standards of the banks and age-old NBFCs, and trying to kind of get the governance in place and whatnot. I think in a way it is probably good for the industry, but of course the ones who have been affected is going through the burnt of it and whatnot. But in a way, the companies which are compliant with all the regulations and whatnot, I think there's probably nothing to worry, is what I believe. Yeah.
But, when you talk to investors, for instance, is regulatory risk a bigger risk that's coming up increasingly in conversations? Or do you think overall, that one particular incident related to Paytm has not really affected sentiment as much?
No, so definitely there is certain sentiments that has kind of changed, right? So for few, it is kind of, few of the people who are probably watching too much away from the Indian ecosystem. Probably these are investors probably sitting in US or in Japan or somewhere, who are much aware of what's happening at the ground level. Probably they are reading only the headlines and they are making their opinions based on those headlines. But I think the what we can see in the difference is the people who are having their own shops in India. There are a lot of local investors or these international investors who are having their shops in India, right? So I think they understand the reality about whether it is a specific company problem or is it an industry problem and whatnot. I think they are able to kind of decipher it better compared to somebody who is quite outside.
Just a quick word on KreditBee's, own outlook for the year. What sort of disbursements are you eyeing through the platform? What sort of growth are you seeing there?
No, I think today probably the growth is also kind of what we are looking at is from the availability of the debt capital, right? So today I think for NBFCs largely the debt capital has little bit shrunk, so that's the market phenomenon what is happening. But what we are looking is at least to grow by at least about like 30-40% on what we have been in FY24. I think that's what we are pegging at.
Just a final question, since you brought up debt, the cost of borrowing since the Reserve Bank of India introduced a higher risk weight for bank lending to NBFCs as well. How has that trended for you?
So for the entire industry, I think the cost of debt has increased, and it's more than the cost of debt. I think the bigger problem has been availability of debt itself, right? So the availability of debt has definitely squeezed for the NBFCs and the fintech industry, right? So I think that's a generic phenomenon. We get a little bit positively picked up for a couple of reasons. One is since we had a large fundraise very recently, so that puts us in a lower leverage. There is something called as a debt to equity leverage. Your equity base is larger, so therefore your leverage becomes lower. So that is one part. The credit ratings plays the second part. The quality of the investors and the entire the performance of the company for over like 3-4 years. I think all this kind of matters, and somewhere we get positively picked out of that. So the impact for us has been definitely there is a cost of debt has increased, but availability of debt is still intact for us. But for the industry, I think there is an impact even on the availability.
Thank you, Madhu. Thank you.
On that note, it is time for us to head into a short break. But coming up next, is the funding winter thawing for Indian startups? What's the road ahead looking like? We answer those questions after the short break.